please do remember that hot stocks, hot cryptocurrency projects have been around over and over and over. There are some that grew and became mature, but majority of it collapsed. And that's why everything has to align to what I said in the first point, that you need to have a goal. But above and beyond that, everything needs to align to the research that you've put in and also your risk tolerance. That no matter how much you hear it from other people, your friends or family, or even from YouTube channels, or even from me as well, if it does not align with what you know, what you're learning, and what you're trying to achieve, no matter how popular it is, don't invest in it. In this video, I want to talk about the top 5 investing mistakes that people make. And this is something that I've researched from different articles, not just from Southeast Asia, but from different parts around the world. Because you have to realize this also, that investing isn't just about information and data, because it's humans that are investing in the markets, regardless if it's stocks, real estate, cryptocurrencies, NFTs, and everything else in between. There's a level of emotions that are involved, there's a level of greed, there's a level of fear, which when you add that to data, when you add that to everything else in between, it causes people to decide not just based on rationality, but majority of the people who come in are irrational. And the goal of this video is to give you as much information as possible that you can digest it in a way that you don't have to make the mistakes that I've made, and you don't have to also make the mistakes that other people have made as well. I've mentioned this, that experience is the best teacher, but it's also amazing if you can learn from the experiences of other people, so that your learning curve is faster, so that you don't get hurt when you invest. You get to do things at a much better pace as compared to me and other people before me. And that's why, that's the heart of videos that I've been making over the past few years, is to change the narrative that people can successfully invest, that investing should not also be boring, but it's something that you could do in conjunction to your job and business, that could be an asset class for you that will help you grow what you have. Mistakes will still be made. Even if you watch this video, and even if you have been investing for quite some time already, you still have mistakes, because investing is never playing a perfect game. But when you make a mistake, you learn from it, you pick yourself up, and you try to make yourself better. But this is what I've noticed as 5 mistakes that people have made. Number 1 is this: most people don't have a plan. One of the most common investing mistakes is not having a clear plan for what you want to achieve with your investments. Without a plan, it's easy to make impulsive decisions based on emotions or short-term market fluctuations rather than long-term strategy. That's why I've been hammering this also in different videos, that you have to segment your investments and planning towards it. That you have short-term investments to hit, which are low risk, to hit short-term goals. You have mid-term investments which have a higher degree of risk also, but are there to hit mid-term goals and have a higher ability for you to actually earn more. And lastly, you have long-term investments that give you the ability to earn more over the long term, but give you a relatively higher amount of risk as compared to the first one. And I've been saying this all the time: don't just invest because you want to earn, invest because you want to hit a goal, invest because there are certain things that matter to you that you would need to invest in order for you to be able to multiply yourself, in order for you to be able to leverage yourself, in order for you also to make your money work hard for you. But a plan is more important before investing into anything else, because without a plan, it's easy to become emotional. Number 2 is this: chasing hot stock, or even chasing hot cryptocurrencies, or even chasing hot NFT projects. I think it's a common mistake that people would want to go for the latest trend, popular, what's noisy, what's edgy, rather than trying to do your own research and investing in companies, stocks, cryptos, NFT projects that align with your own goals and risk tolerances. Please do remember that hot stocks, hot cryptocurrency projects have been around over and over and over. There are some that grew and became mature, but majority of it collapsed. And that's why everything has to align to what I said in the first point, that you need to have a goal. But above and beyond that, everything needs to align to the research that you've put in and also your risk tolerance. That no matter how much you hear it from other people, your friends or family, or even from YouTube channels, or even from me as well, if it does not align with what you know, what you're learning, and what you're trying to achieve, no matter how popular it is, don't invest in it. Because you know what that does? It doesn't give you conviction. It doesn't give you the ability that when everything's scary, If you just went into it because it was popular, it's easy to get out. It's easy to panic. It's easy to jump ship. It's very, very important not to chase hot stocks, not to chase hot crypto projects. Number 3 is this: being too conservative or too aggressive. Find the balance between being too conservative and being too aggressive with your investments. And I've said this in different videos, even if I could take the risks of cryptocurrencies, of global stock, I still invest in bonds. I still like dividend stocks. I still like REITs. I still like also storing cash, because I do know that the more aggressive I am, the more I also need to have a counterbalance in terms of assets that I actually have. I need to have a counterbalance also on something that will protect me when times are bad. The problem is this: if you're too conservative and if you put everything in cash, if you put everything in bonds, you'll probably lose out on the upside. You'll probably lose out also on inflation. You'll probably underperform. Things that you purchase might be more expensive also over time. You'll end up regretting that you should have done this, you should have done that, and you should have also invested in something that could have given you a greater yield. The problem also of being aggressive is that the higher the risk, the higher the return. But not all of those high-risk investments will pan out. When we start investing, we all have this ideology that our investments will do well. We all have this ideology that we're gonna make money, it's gonna go to the moon. But the reality is, not all of them do well. Not all of them will actually go up. Not all of them will actually move. Not all of them will be Tesla. Not all of them will be Apple. Not all of them will be Microsoft. Not all of them will be Bitcoin. Not all of them will be Ethereum. Worst case is you lose everything, similar to what happened to Luna, similar to what happened to everyone who placed it and went all into crypto and went into FTX or bought at the peak. It's very, very important to have a balance of each. But the younger you are, as a rule of thumb also, the more aggressive you can become. The older you get, the more conservative investments that you should have. And that's why, if you've noticed my videos, the older I've been getting also, I've been focusing on bonds and focusing also on dividend stocks as well. Which leads me to number 4. The biggest mistake of a lot of people, aside from being either too aggressive or too conservative, is that they don't diversify. Not diversifying your portfolio is another common mistake. Investing all your money in one stock or industry can be very risky, as a downturn in that sector or that company could result in significant losses. So don't just diversify for the sake of diversifying. Diversify also because it actually works. Because it also not just protects you on the downside, it will also give you upside once money rotates to a certain sector. If you've noticed it, how stocks went in 2020 when everything shut down, those that were unaffected by the pandemic, online companies that sold stuff that are highly essential, did well. Then as the economy started to recover, as we started to open, look at Zoom, those tech companies that were stay-at-home related stocks, they all started to go down. The ones that were highly connected to the vaccine. And then the ones that were connected to the economy opening up, malls, vacation spots, airlines, they've started to do better. And for you to be able to capture that, I think diversification does the trick. But don't over-diversify in a way that you buy so many that it doesn't make sense anymore. Just diversify in a way that it protects you. Should this go down, it won't totally devastate you because you have other assets or stocks that are totally unrelated to it as well. Number 5 is this. One of the biggest mistakes of people is that they don't keep an eye on fees and expenses. So please do remember that high fees and expenses can also eat into your returns over time. And it's important to be aware of them to minimize them as much as possible. Especially if you're in it for the long term. High management fees, high transaction costs done for 10, 20, 30, 40 years will eat up much of your upside as well. Those are the 5 investment mistakes of people: not having a plan. Number 2, chasing hot stock. Number 3, being too conservative or too aggressive. Number 4, not diversifying. Number 5, not keeping an eye on fees and expenses. So it's important to keep in mind that investing is a long-term process, and it's important to have a clear plan, do your own research, and find the balance between risk and reward, diversifying your portfolio and minimizing fees and expenses. And additionally, this is very important, it's important to remember that past performance does not guarantee future results. So if you want to know more about this, I have books that I've written, they're down below. I have seminars that I've created, they're also down below. And I've thousands of videos here on YouTube. And if you find value in what I'm giving you, appreciate it if you press the like button, put a comment below, and subscribe to the channel. This is marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.